Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be going through our live mortgage rates, and then we're going to be talking about interest-only loans. Give us a minute here to go live on all the different platforms. We do appreciate everybody tuning in nice and early. We got the chat up there on the screen. Feel free to drop a comment there in the chat as you tune in. Definitely a great topic here for today, and I don't think we've been over this in quite a while, so definitely excited here for today's topic. And it looks like we're live on all the platforms, so we'll go ahead and get started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. Drop any questions you have in the chat as we go through here as well. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. And today's loan type is going to be interest-only loans, something that we're very familiar with here at the Mortgage Calculator with all of our different cool products and non-QM stuff that we do as well. So we'll get into that here shortly, but before we do, we'll pull up our live rates. So Nick, if you're ready, let's go ahead and pull up our live rates today for the different programs and see what they are looking
like. All right, so we do have our live rates here for today. It is July 17th. Our initial rates are live for most of our standard programs here. So we'll go through some examples, and then we'll pass it over to Jose for some detailed examples. For all of the scenarios, we will set up a basic loan so we can compare the APR across the programs. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. For all the scenarios, we're going to use a standard single-family home. We're going to use a $500,000 purchase price, $400,000 loan amount, corresponds to 80% loan to value, 20% down payment. We use an estimated 760 credit score and an estimated 40% debt to income ratio. So those will be the settings here that we use. And let's check out the rates. Not much change since yesterday. Our standard 30-year fixed conventional option for a primary home, typically the most common request, most common option. Rates come in today at 6.375, final APR 6.797. And if our customers don't qualify for any reason for a conventional option, we typically want to present an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio, but it also requires upfront and yearly mortgage insurance. FHA comes in today at 5.625, final APR 6.569. So if we compare these two and our customer qualifies for both, FHA actually could be a touch cheaper if our customer is willing to do the yearly mortgage insurance. And our customers that need to use it, definitely a great option as it is very comparable to conventional right now. And for our eligible veterans and active service members, if they have their VA eligibility, VA programs are available. Rates as low as 5.75, final APR 6.055. So notice for our eligible borrowers, the VA is much better than the conventional or FHA. So those that are eligible, definitely a great option. And moving down to our final standard option here, 30-year fixed USDA. That's only for homes in a USDA eligible area, typically the rural areas of the country. If our home is eligible and our borrower is eligible, this is a great option. Rates as low as 5.75, final APR 6.5 with all the fees included. It's a touch cheaper than FHA today, so our customer typically be comparing these or comparing to a conventional, which it's also a touch cheaper than. So great option for our borrowers looking in those areas. Now, many other banks or lenders, if their customer doesn't qualify for the standard options, will have to deny them. But that's where we love to present our alternative options, over 5,000 options, starting here with our 30-year fixed non-QM alt doc for a primary home. So if our customer, for some reason, doesn't qualify for a standard program here and needs to use alternative docs, we can do that. We can use bank statements, 1099s, asset-related, P&Ls, all kinds of different options. This option here is typically a bank statement coming in at 6.75 today, final APR 7.067. So when we compare that to a conventional option, we're usually within about a half a point, which is great for our borrowers that need to use it. Not that much more expensive to use alternative docs. And for our investors, we have tons of options. First up is our non-QM alt doc option. So again, bank statement or similar, coming in today at 7.25 rate, final APR 7.595. and we'll compare that to our other investor options. So our government programs, USDA, FHA, VA, are not eligible for investments. So we have our conventional option, which starts at 7.125, final APR 7.482. So notice this is a touch cheaper than alt doc today. Sometimes they flip flop, but we always recommend for our investors to check out our favorite programs, our DSCR options. First up is our option with a 3-year prepayment penalty, which is standard on these options. DSCR stands for debt service coverage ratio, no employment or income needed. We simply use the estimated rental income on the appraisal to determine a DSCR ratio. If the estimated rents can cover the expenses, aka the property will cash flow monthly, that's a ratio of 1 or higher. We use a ratio of 1.5 for all these demos so we can see all the options. 3-year prepay is the standard option. Rates today, 6.75. Final APR, 7.093. So that beats conventional by quite a bit there. And we even have a few programs that allow a 5-year prepayment penalty, which brings the rates down to 6.5. Final APR, 6.823. So great options for our investors there. Willing to do the prepayment penalty. For those that do not want one, or some states do not allow one, we do have options for no prepay for a DSCR loan. Rates as low as 7.375. Final APR, 7.710. Just a touch higher than conventional. So most investors will typically take a DSCR, even if it is substantially higher cost than conventional because of the ease of the loan there. So great options. Usually recommend to add a prepay if possible. And our final 2 demos here, very popular request. We did a demo on this yesterday, I believe. 30-year fixed second mortgages. So many of our customers need to get cash out of their property, highest equity in the nation right now. But many of our customers don't want to touch their first mortgage. No problem. You don't have to use a HELOC. We have 30-year fixed second mortgage options for a primary home. Rates as low as 8.125. Final APR 8.278, which is substantially lower than most HELOCs and is a fixed rate mortgage. A little more sustainability there. And these are non-QM as well, so we can use bank statements and other alt docs. We also have our option for investors to get cash out of their investment properties with a fixed second mortgage. Rates as low as 9.75, final APR 10.243 to get cash out of that investment property without touching that first mortgage if it may be preferable. And there are seldom HELOCs that are available for investment property, so very cool option there. Now we will go into some of our more advanced programs. A lot of our non-QM programs, almost all of them actually, allow an interest-only option. That's one of the cool things about doing non-QM. Every program has multiple variations that we can do, interest-only being one of the most popular. And there's a few different ways to do this. So I'm sure Jose has a couple different examples here, but a very cool feature for hundreds, maybe even thousands of our programs have interest-only options. So Jose, let's check out some actual examples here.
Give me a minute. My screen is frozen here. All right. I am up.
Oh, we can hear you though, but
okay. Yes, I'm up and running here now.
Okay.
Sure. Okay. So interest only is a very good feature, but it is really only a practical feature for purposes of qualifying the borrower when underwriting will qualify the borrower on the interest only payment. So I would definitely tell everyone to be on the lookout when you're reviewing the guidelines to ensure that the option that is being selected will qualify the borrower on the interest only payment, because there are basically 2 reasons why you would go interest only. One is because a customer wants a lower payment, the interest only feature, and the other because they want a lower payment, but you also need to qualify the borrower for the lower payment. In order for the borrower to qualify, it could be because you're trying to keep it under a certain DTI threshold, or you need to be above a certain debt service coverage ratio amount, right? It could be 1.0 that you need to stay above, at or above, so that you could get the best pricing. Interest only is also offered as a 30-year interest only loan or a 40-year interest only loan. That's another important point to consider. 40-year interest only is more the norm than a 30-year interest only. And how the interest-only loans will work is assuming that you've chosen a product with a 10-year interest-only payment and the product is a 40-year amortization, then after 10 years of interest-only payments, the loan will recast into a 30-year fully amortizing loan if it's a 40-year amortization that you started with, or if it's a 30-year amortization that you started with, it will then recast into a 20-year fully amortizing loan. So those are important points to consider. Now, most borrowers that choose interest only are looking at more of a short-term perspective rather than a long-term perspective. They don't plan to hold that loan 10 years, hence why they wanted to go interest only. Maybe they just want to hold it for a couple of years and just make the minimum payment to enjoy a little bit more cash flow from the property while they sort out whatever they need to sort out, or while maybe they wait for property value to appreciate, or maybe wait for the interest rates to drop and then they're going to refinance into a nice low interest fully amortizing loan. So there's many reasons why the borrower would want an interest-only payment, or many reasons why the loan consultant would propose interest-only. So let's get right into it and let's show you different examples that we have here for you today. So our first example is for a full doc. Now, one thing I will state also, the interest-only loans are non-QM typically. You're not going to find any agency loans that are interest-only. So here is our 40-year. Now, this is at a 90% LTV also, I forgot to put on there, which is the maximum LTV. Full doc purchase, 40-year amortization, and you're looking at lowest cost option, 9.375 at a cost of 1.5 points. And you can buy that down to 8.625 at a cost of 2.5 points for our 90% LTV, 40-year amortization, full doc refi. Now our interest-only 30-year option, same loan. Now we drop a little bit here. We were at 9.375 costing 1.5, and here we're at 9.375 costing 1 point. You can buy that down to 8.375 at a cost of 2.5 points for our 90% LTV, fully amortizing, full doc loan. And now we have a primary bank statement purchase, 90% LTV as well, 30-year amortization on this option. Now with the bank statement option, you do see the rate does increase a bit. We're looking at 10.125 is our lowest cost option at a cost of 1.25 points. And you can buy that down to 9.125 at a cost of 2.375 points for our 90% LTV, which is the maximum LTV with 30-year amortization on our interest-only purchase. And now the same 90% LTV bank statement with 40-year amortization. And here we are at 10.125, costing 1.75 points. 9.375 lowest rate option costing 2.5 points, and this is for a maximum LTV of 90%. So now when we bring the LTV down to 85, you're going to see a substantial drop in the rate. 90% being the max, 85% a little bit more standard, more liquidity at 85% in secondary, hence we have lower rates. 8.5 is at par, and 7.625 is costing 2.5 points. So definitely good to give the borrower both options and let them see how much of a better option it is at 85%. They could get 8.5% at par as opposed to paying 2-3 points in the other route. So could be a better overall option if the borrower has the extra 2 or 3%. And here now we are at 40-year amortization, and you do see a substantial increase when we go to 40 years. So 30 years definitely would be a better option, because in essence, like I mentioned, the borrowers really are not going to hold this product for 10 years. And if they can get qualified on the interest only payment, you're going to have a lower interest only payment at a lower interest rate. Amortization does not come into play when you are qualifying the borrower based on the interest only payment. The only thing that comes into play is the interest rate. So if the interest rate is lower, you're going to have a better chance of qualifying your borrower for that lower payment that you're looking to do if they need to get under a certain DTI. So here, 10.125 is costing 1.8.5 is costing 3.375 points. And this is investment purchase. Again, this is our first option here for investment. Interest only investment with 40-year amortization at an 80% LTV. So now at the more standard 80% LTV, look at that amazing rate, 7.75, 80% LTV investment purchase. 7.75 is at par, and you can buy that down all the way to 6.75 at a cost of 2.6 points. And our last example here is our DSCR product, right? So I went straight for the jugular on this one. Interest only investment purchase, 30-year amortization, 80% LTV. Now look at these rates. This is not a typo, folks. This is what we can get you on a 30-year amortization, interest only, where we can qualify you on the interest only payment. So 7.375 is actually offering a lender credit, right? It's a little lender credit, but it's a lender credit, right? And you can buy that down all the way to 6.375 at a cost of 3.225 points for a DSCR 30-year amortization interest only purchase. So if you need to keep it at 1.0 or above, this is definitely the tool that will help your borrower get to the promised land. So definitely look to the mortgage calculator for all of your interest only loans, DSCR, non-QM, agency, fixed flip, ground up construction. We have over 5,000 products at your disposal.
All right. Thank you, Jose. I don't see any questions here. No, still no questions have came in, but definitely great programs there to go over, or like you said, a great tool to have there in your toolbox. So no questions here, so we'll go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into different loan types. So we'll be back tomorrow with a new loan type and to go over tomorrow's rates. We appreciate everybody tuning in, and we'll see you tomorrow at 11 a.m. Eastern for the next episode of Daily Rates Live with the